Welcome to another episode of Equity Mates here on AusBiz. We're excited to be back for another week. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going?
I'm very good, Bryce. Great to be back here. We're in the studio again, but we're looking out in the AusBiz producers, and there's more people out there.
Yeah.
Things are getting back to normal. We're in the office this morning, and there's people buzzing around. It's great to see Sydney is, returning to normal, and it's good to hear the rest of Australia is as well.
Yes. So just in time for summer, which is nice.
Yeah.
But look, we are here to talk about all things markets and finance, and we're going to be discussing Glasgow, Ren.
Yeah. We're here to discuss things
which is not
markets
quite
and
markets and finance, but we're going to be talking about the fact that Glasgow and COP26 is kicking off this week, what it means for Australia, some of the commitments that we've spoken about, and then, because we love talking about equities, what it means in terms of the opportunity for investors. And
I think it is not too much of a stretch to say that it's the biggest thematic of this year and will be the biggest thematic of the coming decade.
Yeah, absolutely.
Climate change, energy transition, resilience, all of that stuff. Like, that is the theme that will define the 2020s.
Well, I mean, even I just think about some of the content that we're talking about on Equity Mates. This week we have 2 episodes on renewables. It's a theme or a thematic that so many experts are now bringing up, and CEOs in the interviews with them turning to, renewables within their business, how they're positioning their businesses to be renewable and hitting those targets as well. So, yeah, it's one of those thematics that if we look at ourselves in the future and say that we missed it, rookies.
Yeah, and that is an important point. The opportunity and are we going to miss it?
Yeah.
That is an important point. So, look, the reason we're also talking about it, so Glasgow kicks off on Sunday the 31st of October. Put it in your calendars, block the day out. It will be riveting, the opening day, some big speeches.
What is Glasgow? What is Glasgow for those who have just joined?
It's a city in Scotland.
Nice. Why is it kicking off?
It's the follow-up to the Paris climate talks, and it is every nation, most nations on Earth coming there to talk about what they're going to do to stop climate change.
Yes. And ScoMo's been copping a lot of heat.
Yeah, well, ScoMo wasn't even going to go.
I know.
Well, he said he might not attend because he's been travelling a lot. He has since confirmed he will attend. But look, we're obviously talking about this because the Nationals and the Liberals have had a bit of an internal beef, an internal discussion over the past few weeks. And we, last night, finally got an outcome. The majority of the Federal National Party room agreed to a net zero deal on Sunday. Some say it was 13 votes to 8 in favour. Some say it was 12 to 9. It is a secret who voted for what. It's come out that Barnaby Joyce, the Nationals leader, didn't support it. But Scott Morrison basically said, I'm going to Glasgow with or without you, with a net zero by 2050 commitment. And so they eventually got in line. They did get an extra cabinet seat out of it, it's been reported.
The Nationals?
The Nationals, yeah.
Well, there you go. I mean, it's good to finally see that there has been some sort of commitment, but it's not great that it took so long and such back and forward to get there, and it's a pretty weak commitment.
It's the bare minimum.
Yeah,
it's the bare minimum
pretty
commitment.
weak. Yeah.
But for me, I want to take a moment before we get into the investing side of it and just reflect on how much Australia has changed in the past 4 years. And we've been behind on this issue from the very start. But 4 years ago, Scott Morrison stood in Parliament holding a lump of coal in his hands and calling the Labor Party like coalophobic or something. Now he's trying to push net zero on a reluctant party. 3 years ago, the Business Council of Australia described a 45% emissions reduction target as, I quote, economy wrecking. Now they're saying it would boost the economy by just shy of $1 trillion over the next 50 years. And that's this whole thing about not missing the opportunity. 3 years ago, that's a big turnaround.
Massive, yeah.
News Corp. In January 2020, Andrew Bolt was publishing headlines, warming is good for us. And over the last decade, 3 prime ministers have fallen on the back of pretty concerted News Corp campaigns around energy and climate policy. Now News Corp are leading with multiple page spreads in support of net zero.
Ridiculous.
The leader of the Liberal Party, the Business Council of Australia, News Corp, like these big conservative institutions are all realising that climate change is real and that we need to do something.
Well, it's that they're realising that if they don't show some sort of support for it, they're in a world of trouble.
I think it's genuine. But regardless, if it's genuine or not, they're doing it.
Yeah.
But the Nationals were still out of step. And people then say, well, the Nationals are the party, not the party of farmers anymore. They're the party of mining interests. But even the miners are stepping up and saying we need to do something about climate change.
Yeah.
On the same day, last Thursday, that Barnaby was out there saying it's not a foregone conclusion. We're going to do something about this, about getting a commitment for Glasgow. Rio Tinto on the same day pledged $10 billion to triple its 2030 carbon reduction targets from 15% to 50%. And Fortescue obviously are investing a lot in Fortescue Future Industries. BHP are divesting certain businesses and investing in, I guess like future economy metals and green economy metals.
Yeah. Out
Come
of touch.
on,
Out of touch.
It is just
and Barnaby actually didn't even support it. He was on the opposing side. Yeah.
Matt Canavan, also someone who doesn't support it, is out there tweeting memes about how we're only going to be able to eat 14 grams of meat a day because the UN will enforce these net zero policies. It's just like, come on, guys, lift.
Yeah.
If mining companies, if the Business Council of Australia, if News Corp, if a Liberal Prime Minister can all realise it, why did this take so long? Anyway, that's my soapbox. I know some people will disagree with me, but I just had to say it.
Yeah, but and for me as well, like it's been a grind to get to this point, which is Australia committing to the absolute bare minimum. And the next step is to actually see some sort of an action, because it's easy for them to come out and say, let's go net zero by 2050. Whether or not they do or not, that's yet to be seen. But if they do, and we've spoken to experts as well, there is nothing more, we're seeing private companies, Rio Tinto now pledging, governments now pledging, and this all has an impact on the investment opportunity that is in front of us, which is massive.
Well, let's talk about the investing opportunity. So we've pulled out a few ETFs, a few companies, and then a novel way that you're playing this carbon trade.
Yes.
Yeah?
Yeah, let's do it.
Let's start with some funds. So obviously these are some of the ASX listed ones, and the list is by no means comprehensive. But there's obviously a big universe of sustainable ETFs or sustainable funds. And, a lot of those funds invest in companies that are, involved in the fight against climate change or this transition in some way. But there are a few, I guess, more specific ETFs out there. Two that come to mind: BetaShares Climate Change Innovation ETF and VanEck Clean Energy ETF.
Yep.
Much more focused on this particular issue.
Yeah. The tickers BetaShares is Earth, ERTH, and VanEck is Clean, or CLNE.
Yeah.
Nice. What are some of the major holdings, though, within them? Because they do differ.
Yeah, so we looked at the three biggest holdings in each of these funds, just to give an idea of some of the companies that you can invest in this space. If we start with BetaShares Climate Change Innovation, Tesla is the biggest holding.
Yep.
Which isn't surprising.
No.
What did surprise me is it wasn't in the major holdings of VanEck Clean Energy ETF. I don't know if it's in there at all, to be honest.
Yeah, I don't think it is, because we did look at this stock quite recently. They're much more in the producers of clean energy from memory, whereas I think the BetaShares one is more about those companies in that innovation space, even though Tesla is involved in some way, but I think maybe it's not pure enough because the VanEck one is a bit concentrated. So
speaking of it not being purely about energy, but about broader climate innovation, the second biggest holding in BetaShares ETF, Infineon Technologies, probably got this pronunciation wrong, which is a German semiconductor manufacturer.
Yeah, well, we do know that semiconductors is obviously a very important part in the technology that is going to be driving a lot of this renewables. And their third one, Ren, is the Vestas Wind Systems over in Copenhagen, Danish manufacturer, seller, installer, and servicer of wind turbines.
Yeah.
Pretty straightforward.
And in our interview coming out on Thursday with Mary Manning, she speaks about some of these big wind turbine manufacturers and how they are perhaps better. They perhaps have more defensibility than some of the solar players out there.
Yeah.
So check out that podcast episode if you want to understand why. So if we turn to Van Eck, so BetaShares is looking at climate change innovation more generally. Van Eck, clean energy a little bit more specifically. A few of the big names, Plug Power, listed on the NASDAQ, a hydrogen fuel cell company. So a lot of love for hydrogen in Australia. Plug is a big hydrogen player. The second one, Sunrun, NASDAQ ticker RUN, provider of residential solar panels and batteries. And then the third one, Solar Edge Technologies, actually another company that Mary Manning spoke about in this interview, an Israeli company that works on, I guess, components for solar panels, like to optimize them, solar inverters. I'm going to get lost in the technology, but basically to make them more efficient and allowing them to run as individual panels rather than as a full like solar farm.
Yeah, so that ATF is not only the energy producers, clean energy producers, but also sounds like those picks and shovels businesses as well that feed into these solar producers and whatnot.
Now we ripped through that because I want to give us a bit of time to talk about your novel way of playing this trend. So
I don't know how novel it is.
Well, it will be novel for some people.
Yeah.
If they haven't listened to you on the podcast.
True. Well, how about we...
But let's take a step back. So, you know, you're interested in climate as a theme. You think this transition is happening and you want to invest in this mega trend of, you know, carbon-intensive fossil fuels to renewable energies. You're seeing all these politicians meet in Glasgow and the commitments that have come out of that. You're seeing companies respond to that. You can invest in ETFs or manage funds that invest in this theme. You can find individual companies, or you can do what you do, which is invest in, I guess, the commodity itself.
Yeah, invest in the carbon price.
Yeah.
Yeah, well, as you said, I think this, the reason I like this is because we've got all these commitments coming out, as you said, government commitments, companies are now committing to reducing targets, and one of the easiest ways for companies to do that is to actually buy credits to offset the carbon emissions that as a result of their business.
And what you mean by that is when we say net zero, we don't mean producing zero carbon.
Yeah,
it means
Qantas will very difficult for them to get to that.
Yeah. It means for every ton of carbon that they emit into the atmosphere, they offset that ton.
Yes.
And they can do that the old-fashioned way. You know, when you buy plane tickets and it's like, I want to offset the carbon, and then Qantas say they'll go plant some trees.
Yeah.
Probably pay someone to plant the trees.
Yeah.
Like that is. That's an offset.
Yeah.
And there are now markets where, solar power generators, wind power generators, a whole bunch of different industries create carbon credits because they're, doing something that is offsetting carbon or not producing carbon in the first place. And then they can sell that to other companies.
Which is another interesting investment opportunity, is investing in the businesses that create these carbon offset products, which we've spoken about on the show before.
Yeah.
But this ETF that I'm in, and I really like it, it's called Crane Shares Global Carbon ETF. It's listed on the New York Stock Exchange. The ticker is KRBN. And it essentially tracks the price of carbon, or the futures contracts for carbon. And the reason I like it now is that the dynamics are that there's far fewer carbon credit or offset certificates available relative to the demand for them. And we know that the basic economics of supply and demand should then lead to the price of carbon going up, just because there's way too many companies out there now wanting to buy and committing to buying or committing to offsetting their carbon footprint. And one of the ways to do that is to buy these certificates. And it's been performing really well recently.
Yeah, it's up. Well, it's doubled in the past 14 months since it launched. It's up 43% in the past 6 months, so it's doing well.
It's been doing well.
And I think it's important to note that the futures market is used by a lot of companies to hedge. If they know that they're going to need to buy carbon credits in the future, or they're going to be in like really carbon intensive activities in the future, they can use they can hedge that carbon risk. But that expected future demand in the hedging may also push the futures market up further.
Yeah. Now, of course, I would suggest that I don't think this is just a buy and hold, leave it forever. There will be a point where you imagine that the price and supply of creating these offsets will equalize the price of carbon. But for now, there's certainly an imbalance between supply and demand.
Yeah, well, they say the recipe for the solution to high prices is high prices, and what you would expect is if the price of carbon gets too high, more and more businesses will enter carbon credit generating, businesses like solar or waste to energy or forest regeneration, planting trees, all that stuff to create more credits, which should eventually bring the price to some equilibrium.
Yeah.
And if carbon intensive industries have to keep buying more and more expensive credits, eventually they're going to have to shutter their doors, and that will reduce demand. So yeah, you're right. Supply and demand should equalize over the long term.
Yeah.
But if you've held it for the last 14 months, you've doubled your money. So not complaining.
Well, that is a nice wrap, Ren. Plenty going on, massive commitments now around the world from governments. It's a space that we're going to continue talking about here on Equity Mates because it is right in front of us. Yes, it's new. Yes, there's probably companies that are going to be the winners in the future that we're not sure of right now, but there are ways to get involved with broad investments and actually start getting your toes wet in this space because there's no doubt that a lot of experts think that this is a huge investment opportunity.
Yeah. So that will not be the last time we speak about sustainable investing and climate change, but that is all the time we have today. So join us for the rest of the week. We've got some great experts. We're going to talk all things SPACs tomorrow. But in the meantime, have a great day. Thanks for joining us.